Hi everybody, my name is Ryan Henderson and I am a tutor at Phoenix Financial Training here in Dubai. I specialise in teaching taxation and advanced taxation and also financial reporting papers as well. Today what I'm here to talk to you about is the taxation paper and making sure we can ensure exam success when you are taking the taxation exam in your period. Now, before we do actually make a start on going into the details of taxation, what we do have here, of course, are the pass rates for the last 5 sittings globally. So this is including September 2020, which was 49% globally. Now, just a couple of things with regards to these pass rates. Tax actually is around 50% globally on average, which actually makes it one of the highest passing papers out of the skills fundamental level papers, which doesn't mean it's necessarily easy. It just means that with a lot of work and preparation, you can ensure a very successful pass in this exam. However, today, what I am going to talk to you about is the bits where people make mistakes, the hardest parts that students find more difficult, and also where students are not passing on different topic areas. So what we'll do is we'll go into the next slide. And what we're going to do first is talk about what you would expect in the exam from a tax perspective. So your entire exam is made up of 5 main topic areas, and those 5 main topic areas here are listed on the right hand side. So if we go through each one very briefly and talk about what types of tax they are, I'm then going to pick 3 of these topic areas to go into detail about, and of course explain to you ways that you can work around them and you can find the exam easier. So income tax is the first one. Now, income tax, guys, is paid by individuals on their employment or on their self-employment. So self-employed people work for themselves as a sole trader. Now, this would be paid, as I said, by individuals. Now, income tax is one of the most common types of tax because anybody who works or anybody who earns money, of course, is going to be paying income tax throughout the tax year. Then we have corporation tax. Corporation tax is paid by UK resident companies. So again, a very big topic area, or a very important topic area that can be tested in your exam. Capital gains tax. Capital gains tax is tax paid by individuals on the disposal of capital assets. This obviously only happens when you are disposing of a capital asset, so not as often from an individual's point of view. You have inheritance tax. Now, inheritance tax, I find, is one of the most interesting and one of the most fascinating taxes that we have to go through. And basically, inheritance tax is paid when an individual dies on their estate or even on certain lifetime transfers. While there's certain lifetime transfers is when the actual individual is still alive and they are gifting assets. So inheritance tax obviously is one of the most interesting ones I find. We then have VAT, value-added tax. Well, value-added tax is very popular. It's paid in most countries on most goods and services. And the whole point of VAT is to tax the end consumer, i.e. members of the public, you and me. And then we also have national insurance. Well, national insurance is again paid by individuals on their employment income or their self-employed income. And also this is paid by employers on behalf of their employees. So it is paid by both lots here. So you have the 5 main topic areas, as I said, but today what I'm going to do is focus on 3 main topic areas. Now, the first topic area that I'm going to focus on is income tax, because income tax is vast. There is lots of content with regards to income tax in your exam, and in your exam you will get a 15-mark question in section C on income tax, and that can be any topic areas focusing or within the income tax syllabus. So what I've listed here down the side is basically some of the topic areas that fall into income tax, And I've picked these ones because these are the ones that I find students are struggling with the most when it comes to their studies or when it comes to their preparation towards the exam. So we'll go through each one individually and we'll explain where the students fall down and what they should be doing or what they should know by the time they come into the exam. So the first one is trading income. Trading income is paid by, trading income is income generated by a sole trader, and that is them trading, working for themselves, calculating a profit, and that is obviously from income minus their expenses. Now, trading income has to be calculated by first taking a net profit. So what you have is the financial reporting team. The financial reporting team, they will obviously prepare the financial statements, and then the tax department take over and calculate the taxes that need to be paid. Well, what I find with students when they do come into the class and they start working with trading income is that their knowledge on financial reporting isn't as strong as it should be. Because what we are doing in taxation is we are taking the net profit that is already calculated and we are adjusting it for tax purposes. Now, if you have a strong understanding of how the accounts were prepared in the first place, this actually helps with your understanding and helps with the adjustments that we are making to get to our taxable trading profit from a tax perspective. So with regard to the trading income, what I would recommend, of course, is that students do briefly go over financial reporting or have some knowledge on financial reporting before they do start looking into trading income, because it does make life a lot easier when you are doing that in taxation. Then we have capital allowances. Well, capital allowances is a relatively new concept when you come into taxation because you wouldn't have covered it before. It is relatively similar to depreciation, but of course there are lots of other different tax rules that we have to apply. So the best way I could probably give you some advice on this is to have an understanding first on how depreciation works from a financial reporting point of view, and then we can adapt it and apply it to the taxation rules from a capital allowances point of view. Best way to explain capital allowances are there is a tax allowable depreciation, but obviously we have to follow a more strict method of approach when calculating that from a tax point of view. Basis of assessment is, I always say it's one of my favorites here because I just enjoy calculating basis of assessment. If as a student you probably won't agree with me on this because it can be quite complicated. So basis of assessment is basically working out when the profits of the business should be taxed. So again, a good understanding of financial reporting and accounting periods here is actually very important, because if you don't understand how accounting periods work, then you're not going to understand how we are going to apply it to the tax years. So having an understanding here, of course, of employment income, of basis of assessment, which is accounting profits, and how we would link them to the tax years is, of course, very, very important there from that perspective. We then move on to, of course, employment income. Now, I put employment income in here. Yes, it can be quite tricky, but students relatively find this okay. But with students, they probably leave this until last. So employment income is very, very important because it will come up in your exam. And there are lots and lots of separate rules within employment income that we have to learn with regards to benefits, etc. So employment income requires a lot of work, and it requires a lot of work quite early on there. Income tax trading losses. Now, yeah, this I would say is probably one of the things that students probably struggle with the most with regards to trading losses. And the reason why is because from an individual's point of view who is making trading losses, your sole trader, they have lots of ways that they can relieve their losses. So it's very, very important here to learn the rules. Make sure you have the rules, have the rules down. You are very, very clear on those rules, because what you will probably have to do is adapt to the situation. So with income tax trading losses, we do have many, many options in reality, but all you would need to do is follow the exam, because the exam will give you direction on how you should be relieving those losses. So very, very important to learn the rules first and then follow the rules in the exam or the guidance in the exam on how those losses effectively should be relieved. Now, what we will have to do here on the next recording is actually go through a question. But the question that I put up here today is from March-June 2016, and it is called Patience. Now, what you need to remember is with taxation, the Finance Act changes every year. So currently we are in Finance Act 2019, and this question has been adapted for Finance Act 19, which is of course tax year 1920. So what I have done here, guys, is I've just put a little snippet of the question, not the entire question. So what you can then do is go and search for this question, an updated version of it for tax year 1920, even though it is from March and June 2016. So we are still talking with regards to income tax, and what we're trying to do is talk about the complexities of income tax in an exam question. So income tax, as you now know, covers many areas. There are many areas that can come into the exam, and the tax examiner actually likes to test many areas within income tax within one question. So this question here called Patience, as I said, the whole question isn't here, this is just a snippet, actually covers many areas of income tax, and it brings all of those different areas together with regards to calculating the income tax liability and also maybe the capital gains tax liability. So if we look through this question here, what we have is employment income. So this individual is employed for a period of time throughout the tax year. Now, as we know, under employment income, we're going to have salary, we might have bonuses, we might have allowable expenses, we might even have benefits in kind. So all of these separate calculations you are having to do at this point in time, but that purely relates to the employment income. And then you need to take that employment income back to the income tax computation. So what you need to do with tax is remember the specific rules for each individual item and deal with each one separately. And that is just based on employment income there. Also within this question, we had some trading income. So we had self-employment as well that we had to deal with, calculating the profits, following the basis of assessment and making sure we have the right taxable trading profits in that same question. Then also in this, we had extension of the bands. So there is a donation to either gift aid or a personal pension contribution. We have to extend the band on this one. And also we have capital gains tax. So we had some disposals, we had to calculate our gain, and then we also had to calculate a capital gains tax liability in this question as well. So from this, you can see that there are many different things going on at one time, but the whole point is they come together at the end. So the best way to approach a question like this is deal with each different type of income separately. So what you would do is you would deal with your trading income first. You would calculate your taxable trading profits, put that into the income tax computation. You'll then deal with your employment income, calculate your salary, calculate bonuses, calculate your benefits in kind, and then sum all of that together and then calculate your employment income in the computation. Then you extend your bands. You then deal with income tax. You then deal with capital gains tax separately, yeah? So what you need to do with these questions when you're reading through is compartmentalize each different bit rather than trying to do it all together in one go. Now, with regards to this, as a student, this takes practice. Yeah, you have to make sure you can break the question down into different areas and then, of course, attempt each bit separately in the time that you've got available there. Now, in our next recording, what I will do is go through this question in full, and you can see that when we go through this question, we deal with employment income, we deal with trading incomes, and we deal with each one of these separately, and then it all comes together at the end. Now, I think with taxation, once you know the rules, it's fine, but it's then approach and attempting the question that you have to obviously be up to date with. As I'm talking about the rules for taxation here, guys, you have to, if you are studying, you have to start studying as early as possible here, because with taxation, there are lots and lots of rules that you need to learn, and therefore, the earlier you start learning these rules, the better. It makes your life a lot easier nearer the exam, because when it comes to nearer the exam, you're not focusing on the learning, you are focusing on applying those rules simply to the questions, and you can attempt those questions in full. So stay tuned, and then we'll watch the next video after and we'll go through this question. Now, the second syllabus area that I did choose for you here, guys, is corporation tax. Now, corporation tax is another main topic area in your exam, and you will get this in section C as a 15-mark question. Now, corporation tax is paid by UK resident companies. And obviously there are many complications again within corporation tax that we have to work our way through. So again, what I have done here is I've chosen a few main topic areas where again students probably struggle with the most out of the syllabus of corporation tax. So of course I've put here the corporation tax computation. The corporation tax computation has to be prepared for the CAP, the chargeable accounting period. Now, your chargeable accounting period can never exceed 12 months. Now, this goes back to what I was talking about earlier and the trading income with income tax. A company, even a limited company, will prepare their accounts for an accounting period, and that accounting period can be 12 months. It could be longer, it could be shorter if the company is in startup or they are changing their accounting period, or even they are ceasing to trade. But when we are calculating the corporation tax, we have to calculate it based on the taxable total profits for a CAP, which is a chargeable accounting period. Now, students, if they do not have a good understanding again of accounting periods, then they would struggle with this concept of chargeable accounting periods, because we have to match the accounting periods to the correct chargeable accounting period there. So that does take some work. Corporation tax groups. Now, groups, again, very, very important topic area within corporation tax, because groups do come into play when we talk about the next bit after with losses, also maybe with capital gains, and also with a bit of tax administration, which again we'll talk about in a second. So groups, they fall into three main categories really. They are related to each other, i.e. they are associated companies. This is when the parent has direct or indirect control of more than 50%. Therefore, these companies will be associated, and associated makes a difference when it comes to determining the size of the company and the dividends received. Then we have, of course, losses for companies. Now, with losses for companies, guys, the rules technically aren't massively tricky, but what happens here is, because we've covered income tax trading losses, and then we now talk about losses for companies, the rules are slightly different. And this is where students now actually start to fall down and they actually start to get the rules confused. So what I would always recommend, guys, as a student, and this is what I always do in my class, is we always have two separate computations, two separate tables. One is the rules for the income tax trading losses for your sole trader business, and then the rules separate for companies as well. So always make sure you're keeping these separate when you are practicing your questions, and this will ensure then that the rules are learnt and you will not forget those rules when it comes to taking the questions in the exam. Very, very important with regards to those things there. Tax administration though. Tax admin is something for some reason that students do leave until last. Now, tax administration is very, very important because these questions can and they do come up in the exam. Now, it's just a case of learning these. You need to know when HMRC needs to be notified. You need to know when you can make your claim to reduce your payment on account, or when you want to claim your losses from a company perspective. Tax admin is very, very important in the exam, and I do find from obviously over the years of teaching this paper that students either leave it till last, like I said, or they don't study it at all, which therefore will have an impact on the passing of the exam. So what I would do again as a student here, from all of the filing dates, from even corporation tax to capital gains tax to inheritance tax, I would have separate pages for each of these and analyze them out so you are aware of these dates in the exam. Because if you know these dates, it actually makes it very, very easy in the exam in order to pass it, because you know the questions, you know the answers, and it's relatively straightforward. So always, as I said, lay out all of your information from the different taxes, filing dates, and things like that. Capital gains for companies. Okay, I put this in here purely because, again, students get a little bit confused between capital gains for individuals and capital gains for companies. Companies do not actually pay capital gains tax. However, when we're calculating the gain, there are some similarities with individuals. So we have to calculate the gain for companies, but once we've calculated the gain for companies, it is companies that pay corporation tax on the gain, whereas individuals, they will pay capital gains tax. So again, guys, what you must not do is get confused between capital gains for individuals and then capital gains for companies as well, because companies, as I said, will pay corporation tax there. Now, if we have a look at this next question here, this next question is called online limited. Now, of course, what this has been updated is for the correct financial year. We are in financial year 2019 for your exam up to March 2021 here. Now, this has been updated, as I said, so I wanted to go through this question with you very briefly because this sort of is the same as income tax here. Corporation tax is, of course, the main syllabus area, but there are many, many different areas which are covered within corporation tax within one question. So again, it's all about your approach to answering these questions here that you are obviously or need to be aware of. So this question covers many, many different topic areas. It covers your corporation tax computation. Your corporation tax computation is what you need to prepare in order to calculate your taxable total profits, but it also brings in many other things as well. It brings in your groups, i.e. group companies. Is there any relief available for the group, or are these companies associated? Do we have to divide the limits? It also brings in chargeable gains for companies as well, so we have to calculate the gain, bring that gain into our corporation tax computation, and then non-trading losses. Now, we spoke previously on the previous slide about trading losses for companies, but also we have to consider non-trading losses as well, and non-trading losses are brought into here. So what is a non-trading loss? Well, it basically could be capital losses, it could be property losses, it could be interest losses, okay? But what you now need to deal with is how we will apply these losses when you have a mix. So there could be trading losses, there could be non-trading losses. We need to know the rules onto how to apply these losses. Then you've got your capital allowances here as well. Well, capital allowances, the rules are pretty much the same as individuals, but also there are some slight differences when we're looking at it from a company perspective there. In our next recording, what we will do is again go through this question so you can see the question in full and see how we would attack this question and make sure you've learnt the content prior to it. Then the third and final topic area that I have decided to discuss with you guys is inheritance tax. Inheritance tax, as I said at the start, is one of the most interesting I would find, but it is also one of the topic areas that students do struggle with, and that's purely because in reality it is quite complex. So as we said before with regards to inheritance tax is paid usually when an individual dies, and that is what everyone's general assumption is of inheritance tax. The individual dies, they leave some assets or their estate, what we would call it, to their family and friends, and then that estate effectively is now then taxed. But it isn't always taxed at death, okay? There are these things called lifetime transfers, and lifetime transfers are where students now do start to get a little bit confused because of the computations that we have to put together. So computation one is basically any tax payable on lifetime transfers. These are on assets that are chargeable in lifetime. Not everything is taxable in lifetime. However, what we then have to do is check when the individual has then passed on, because if the individual has passed on within 7 years of gifting in lifetime, there is either additional tax to pay on the assets that were chargeable in lifetime, or these assets that were not chargeable in lifetime now actually become taxable. So if I was to say what the students struggle with the most here is actually the dates and counting the number of years, believe it or not. So what I always say to the student must always use their fingers. They need to make sure they are counting the right dates, the right years, to make sure they are getting the right answer. So computation 1, relatively straightforward, as again, if you know the rules. But then when we move into computation number 2, computation 2 is where it gets a tiny little bit trickier, because as I said, if the donor has died within 7 years, then what happens is those lifetime transfers become chargeable, or there is additional tax to pay. So students will have to basically, in computation number 2, restart the calculation again and then work backwards and look at all of these transfers that have happened during lifetime. So again, with this, a student needs to make sure they are familiar with the rules. They need to make sure they have practiced the rules time and time again to make sure that they follow a strict approach. With inheritance tax, you can get the right answers, and you are capable of putting all of these computations together if you are following the rules and you are following the approach there. Computation 3 is the death estate. The death estate, of course, is tax on any assets that are owned at death. So I think the death estate relatively straightforward, but it's computation 1 and computation number 2 that we obviously do struggle with a little bit more with regards to inheritance tax. Then we've got our third and final question. Now, inheritance tax can come up as a 10-mark question in section C, but it can also come up, of course, in section A and B as your objective test questions as well. Here I've given as a 10-mark question section C, updated again for Finance Act 2019-20. Now, this is a standard question here, guys, called James, and it's basically asking us to calculate any tax that will be payable as a result of an individual's death. But it's not just about the death. We have to consider if there have been any lifetime transfers. If there have been lifetime transfers, this is where we now have to go back and follow the approach. We have to follow the steps. Computation number 1, computation number 2, and then computation number 3 on anything else that is still owned at death. Now, also in this question, it's not just asking for calculation, it's asking about explanation as well. So yes, it's very important to know the rules and how to calculate it, but guys, it's also very important to understand these rules as well, because you might potentially be asked to explain the situation. How can the individual save tax, etc. So in our next video, what we will do is we'll go through this question in full, and of course we'll go through the answers and detailed answers and show you how you would answer this style of question. But what you need to take from this is that, again, this brings in many different things, and with tax, as I've said with the first 2 questions, you have to just make sure that you are following a strict approach. You are following that strict approach, making sure you are compartmentalizing everything and dealing with each item separately, and that therefore will hopefully give you the right answers in the time that you have got available there. Now, how to pass taxation. This is very important, okay? You've got your 5 steps here. Now, step 1, it's saying here, cover the entire syllabus. I constantly say to students from day 1 of a course, taxation is not one of those papers that you can leave until nearer the time of the exam, because there is not going to be enough time to learn all of the knowledge and the content. Taxation, there is lots of content, and the sooner you start learning the rules, the easier it will be, and you will not have to cram it all in at the end. And it obviously, again, makes your life easier. So step 1 would be to firstly cover the entire syllabus as early as possible. Very, very important, guys, that we do this. You need to know the rules in taxation. You can't just get away with methods and approaches to a question. You have to know the rules in taxation in order to pass. That's your first port of call. Step 2 is to, of course, start practicing questions. The questions that you're going to start practicing though first will be the shorter ones, the objective test questions, just to give you a feel for how it is going to work. Once you've done that, you can then, of course, move on to your constructed response questions, your section C questions, which are very, very important. And this is where exam approach comes in. This obviously would be talked about in a different video, but yes, you need to make sure you're practicing as many constructed response questions as possible before you enter the exam. Then step 4 would be to select some key questions. So at Phoenix, what we would do is we go through our exam kits, we give students key questions that they must practice before they do go into the exam. This will give you confidence. It will give you a broad range of different styles of questions that can come up and will be tested in your exam. This is preparing you fully for the exam, covering lots of syllabus areas and lots of content from an exam perspective. Then step 5 is the final step, practicing full mock exams to time. Timing is crucial in your exam, guys. It is very, very important, and you need to make sure you've practiced this prior to going into the exam. You can't use your exam day as the practice. You need to make sure you've practiced mock exams, at least 3 mock exams to time before you enter the exam. And when you enter the exam, you have to have an approach. You need to know which section you are going to do first. Section A, B, and then C, or vice versa. Maybe section C first. I, of course, would only recommend doing section C first if you are good at sticking to time. If not, go through the exam as normal, section A, section B, and then section C. If you have learnt the content, if you have gone through all of the questions, and you have practiced many mocks, you should be okay for the exam. Of course, it takes practice with taxation, and that is what we need to focus on way prior to the exam. Final slide here, guys, how to stay in touch with Phoenix and myself. You've got our website, you've got our telephone number, and you've got their email address, which is the main office, and also you've got mine there should you wish to contact me directly. I do hope that you found this video very useful, and I look forward to presenting you with the next 3 videos on the questions that we discussed briefly today in this recording. Until next time, take care. Thank you very much.